Mark, I'm not going to ask you about Tesla, but I am curious about the tech sell-off that we're seeing. The S&P 500 has dropped 3% since its most recent peak. Does the drop continue come Monday?
My bias is, Kriti, it does continue. I mean, 3% is pretty irrelevant given the extraordinary gains we've seen this year. I mean, the key theme of the past 6 months is that we've seen this straight line rally with almost no pullbacks. And we're getting a little bit excited this week because we're seeing a few percent. This is not really a proper kind of correction at all. Now, I want to emphasize, I still see stock markets making fresh records in the coming months. I think everything is dominated by the AI theme. And while I think we're in an AI bubble, I still don't think we're near the end of that AI bubble. And the earnings story is still very, very strong. The CapEx is extraordinary. The demand is still there for what we're doing. And the problem on the revenue side is not yet coming into play. So I think we're going to have fresh records in the US stock market, which means depending on your time span, you don't really care if we get a further pullback. However, if you ask me for the next couple of weeks, I find it very hard to know. And I have to say my bias is we haven't seen a proper correction yet. We will get a proper correction. And I think we go lower over the coming weeks, but with low conviction.
Is crypto the canary? Am I going to spend my weekend watching what is happening with Bitcoin?
Yeah, there's been a furious debate in our team about what is a leading indicator. And then as a corollary of that, it has seemed at the short term over the last week or so that crypto has been the leading indicator. And is that just coincidence or anything relevant? I think it's really important that over the past year or two, it's been very clear that a large part of the crypto investor base doesn't overlap with a large part of the kind of the macro investor base. And therefore, there's not always too strong a correlation. But it does affect sentiment and it affects the retail wealth factor, which is driving a lot of the other names that are driving this market. So the connection isn't ironclad or super strong. And I think ultimately you can have a material correction in crypto that doesn't collapse the rest of the market. But I think it drags. And I do think we're in the process of a material correction in the crypto space from the digital asset treasury companies that and crypto tokens that have much more downside. Because of that view, I think it weighs on sentiment, and that's why I think that the broader pullback has more to go, but nothing dramatic.
Mark, I was about to call you Guy. Mark, I want to talk about the bond market for a moment. 409 on the U.S. 10-year at the moment. In the last 24 hours, we heard Beth Hammack over the Cleveland Fed really warning and ringing the alarm bells on the inflation risk. Does the yield on the 10-year have higher to go from here?
I think it has much higher to go. I've got two big disclaimers in that view. One is, I thought that back in August, and I was horribly wrong, and I'm still smarting from having got that so completely wrong back then. And second of all, I'm a little bit worried that the steepening of the curve is becoming a bit consensus. I think fiscal concerns will come back into play, and overhanging this will be the Supreme Court decision on tariffs, which will get people concerned as well. We've still got an inflation story out there. So I think ultimately 10-year yields are going a lot higher again. I've got the timing wrong before. Let's see.